Hi, my name's Alan Carter. I'm the president and CEO of Cabral Gold. Cabral Gold has an advanced gold project in northern Brazil. We currently have 2 gold deposits that have 43101 compliant resources totaling 1 million ounces. And we have 43 targets within an 8-kilometer radius of those 2 gold deposits. We have 3 rigs currently turning on site, and we've just signed a contract to add 2 more drill rigs, which will bring the total number to 5 drill rigs, which will be turning for the next 9 to 12 months. I'm here today to talk to Matt Gordon of Crux Investor.
Welcome back, Alan. Good to see you again. How are you?
Nice to be here, Matt. Thanks for having me back.
Well, look, we saw a few headlines, thought we'd better catch up and see what's going on. Obviously, you had a spectacular year last year. This year started off quite well, but you've got a slightly new strategy in part, which we talked about last time you were on back in May. I want to see how things are going because you've gone and raised some money. $11.5 million. That's a lot of money. What do you need it for?
Yeah, it is a lot of money, Matt. It's our largest financing in the company's history. It's a bought deal financing, and we can talk about what a bought deal financing is for those of your viewers that don't know the difference between a bought deal and a private placement. But essentially, the vast majority of that money is going to drilling. As I said, with 5 rigs running, it's a very aggressive program. And there'll be an awful lot of news. So it's a significant ramp up. It is going to go on primarily drilling the high-grade targets that we've got, both within the high-grade zones within the 2 deposits I mentioned, and we're going to be focusing on the high-grade targets that are peripheral to that. There is a secondary objective, which is obviously drilling off this sort of low-grade blanket that sits on top of one of the gold deposits, but the primary objectives remain unchanged.
Okay, well, a few things going on there, but let's strip it back for people. Bought deal versus private placement. Can you explain what the difference is?
Yeah, a bought deal, Matt, is a prospectus-backed offering that is basically backed by frequently a broker or a series of brokers, a syndicate. In our case, it was a syndicate of 4 brokers. And what that means is they guarantee the financing. So obviously what they do is they go out and they look for investors to sell your product to, i.e. your offering. But if they don't get any investors, then they actually take up any amount that's not invested. So the attractiveness for us as an issuer, as a company, is that it's very low risk. I mean, the financing is basically guaranteed, subject, of course, to due diligence. But they run the show. It's very different to a private placement where we go out and we make the offering and we make the calls ourselves and we start taking orders, which is obviously no guarantees at all that would be a success. So as I said, there are some drawbacks to the bought deal. The biggest one being that it's a protracted process. There's an awful lot of steps and there's an awful lot of due diligence that goes into a bought deal. I mean, for example, the due diligence calls, have had, in our case, I think I had the initial due diligence call with the syndicate, with the brokers and all the lawyers, probably involved over 20 people. And there was 115 separate questions on the due diligence checklist. In fact, there were 115 separate steps to following the announcement of the bought deal financing that we had to go through. So it is a complex process, and there's an awful lot to it. But the big advantage for us, as I said, is that it's much lower risk and the financing is guaranteed.
It's lower risk for you, but they need to go through that process because it's their money on the line, not their clients.
Of course it is. Yes, they could get stuck. They could have got stuck if they'd have had no interest at all with having to invest $10 million.
Right. Okay. So I can see why they would want to do that because it's their money on the line. They need to be really sure. When it's a private placement, does that suggest that they're not quite as cautious?
No, I don't think so. I think I think it was very, very thorough. I've been through these things previously, not as the CEO of Cabral, but they are very, very thorough, and there were a lot of lawyers involved than we anticipated, and that was because there was a 250-page technical report, right, that accompanies this, and so we had a little bit back and forth on a few of the parts to the technical report with the BC Securities Commission that they need to sign off, and it was our first time, so that's perfectly normal. So it just took a few days longer than normal, but we're very happy to have it done. As I said, it's a significant financing for us and will allow us to do a lot of drilling.
Can you get? So is it any more expensive because it's a little bit more admin heavy at that end? Like what are we talking? What's the difference?
Because the due diligence is very lengthy and there are so many different steps, and obviously the brokers need a fee. They want a fee, and there are a lot of legal fees on top of that. So that is one of the key drawbacks. Is it is more costly. That's one of the cons to it. But the pros frankly outweighed the cons. We thought very carefully. I mean, to sort of raise this kind of money, and this is an enormous amount of money. Our last financing, as you know, was $4.2 million. So this is almost 3 times the size of that. You need institutional participation, and in order to get that, I'm not saying we can't raise money on our own from institutions, because we did. I mean, we brought in Crescat last time, but that quantum of funding generally needs, from most issuers, most companies needs brokerage support. I mean, the other objective is, obviously what we're hoping is that some of the members of the syndicate, because there are 4 different brokers involved in it, will pick up research coverage on us. The banking side of these brokerage firms can't guarantee that, but we're obviously, we've got quite a lot of dialogue going now with 4 different institutions, brokerage firms. So we're optimistic that some of them will pick up research coverage as well.
I mean, normally you don't like to issue warrants, but you've had to issue a half warrant here. I mean, you mostly had pushback. I mean, what was that conversation like?
Well, the half warrant made it a more attractive product, Matt, obviously, if you're an investor. Last time we didn't, this time we did. So, there is a half warrant, but it is set at 80 cents. We've listed the warrant, so it shouldn't provide any cap on the price. Obviously, if you don't list the warrants, there's always that potential cap on the share price. But now the warrants are freely tradable. So, look, I mean, that could provide us with an awful lot of money here going forward. 7 or 8 million additional dollars. It's a 2-year strike price. And so it could bring in an awful lot of cash here.
And the converse of that is there's also been a little bit of shorting going on. I mean, I haven't met a CEO who can give me an answer about what you can do about it, but I'll ask you anyway. What are you going to do about it?
Well, I can't do anything about it if people decide to sell the stock and play short bets. I mean, we expected there would be some of that, frankly, because the other big difference with a prospective backed offering is that the stock is free trading. So there's no 4-month hold on it, as we've had in the past. So we haven't got, so we're suffering a little bit right now as opposed to suffering in 4 months' time. So it's just one of those things. I mean, some people do like to play games and strip the warrant, i.e. Sell stock immediately. Sometimes at a slight loss, and hang on to the warrant. And so that is the game that some investors do play. It does, unfortunately, it comes with the territory. I mean, does it mean that there's an issue with your company and your project and all the rest of it? Of course it doesn't. I mean, it's just one of those things that we all have to deal with as people that run these run companies.
Okay,
listed companies.
Well, let's talk about the things you can control. You've raised a bit of money. You had a bit of money in the bank. So what's the cash position today?
The cash position right now is about $12.5 million.
Right. So let's talk about what you're going to do with it. I've seen the press release about adding an additional 2 drills. That takes it up to 5. What are you going to do? What are you going to focus on? Well,
most of the focus will be on the high-grade targets that we've got at Cuiú, Matt. So a big, and we're still finalizing the exact details, but in broad terms, a large part of that drilling will go into drilling off the existing high-grade zones that we already know that exist at MG and Central. So the 2 existing deposits. We've been drilling off the high-grade zones at MG, and we will later on this year one of those 5 rigs we'll put on Central. So there'll be 1 rig will be targeting high-grade zones at MG. There'll be another rig that will be targeting the high-grade zones at Central. Now, as you mentioned, in the course of drilling off the high-grade zones at MG, we've found a blanket of low-grade oxide mineralization that also has to be drilled off. That is very much a secondary objective. That will take about 3 months. We estimate we need about 70 holes into that. It is a blanket that's about 500 meters by 400 meters in size. And so the RC rig that we've got, the big RC rig, is currently engaged in that, drilling that blanket off in sections. The other 2 rigs, frankly, are going to go on testing the regional targets. We've got our small little RC rig, which continues to plug away. We've had some limited success with that at Morro de Lua. in establishing there's some continuity of some veins, but frankly, some of the targets that we tried to drill earlier this year during the wet season were tough to get to with that rig. Now we're well in the middle of the dry season, so we're going to bring in a diamond rig also to assist, and we're going back to some of the targets where we weren't able to reach the target on some of these prospects, and we're going to drill them with a diamond rig. So that's basically what's going to happen. Very much a focus on high grade, but we do need to drill off this oxide blanket as well. But that is, as I said, that will take us 3 months with one rig.
Okay, but let's start with the blanket bit. We'll come back to the high grade in a second. Let's start with the blanket, because we discussed it last time when you were back in May, and we had lots of questions come in about why would you target low grade oxides at surface, and what are you going to do about it? What could that do in terms of the way that you plan this business going forward? So do you mind just running us through what's the thinking?
No, absolutely. Yeah, I think that's a good question, because I think some of our shareholders are a little bit confused about why we would be diverted from the high grade thing. And we're not being diverted. As I said, we got 5 rigs that are going to be running for the next 12 months. We're going to take one of those rigs for 3 months and drill off this blanket. Why do we want to drill off a blanket, which is probably averaging 0.5 gram to 1 gram? Although, as you're aware, we have just drilled a month or two ago 60 meters at 3.5 grams in that blanket. So the blanket does have higher grade portions to it. But why would we want to spend 3 months with one rig drilling off this blanket? The answer to that, Matt, is because this is unconsolidated material at surface, extending from surface, that was previously assumed to be sterile in the last resource estimate that we had done. All this material on top was assumed to be waste that would have to be moved to get to the underlying MG hard rock deposit. Now we know that this is mineralized, it's low grade, but because it's unconsolidated material, both the mining and the processing costs are going to be very, very low, much lower than they would be if this was a hard rock material. Why? Because there is no drilling required, there is no blasting required when you come to mining this material. You basically are just scooping it up because it's mud and sand and soil. The other thing is obviously that because you're not dealing with harder material, not only is it much, much cheaper to mine it, but it's much, much cheaper to process it too. You don't have to grind this stuff for hours and hours and days in ball mill or with steel rods and stuff like that. So again, your processing costs are much, much lower. So this is not only going to add ounces to the overall resource estimate, it's a very attractive target because it is sitting right at the surface. I mean, think of it as the cream on top of an Irish coffee, right? For those in North America who don't know what an Irish coffee is, look at it. It has a thick cream on the top. They're fantastic. Go get one. And it's a coffee with whiskey, but the coffee and whiskey would be the underlying deposit and the cream would be the blanket on the top. So, and the other thing to this, not only is it going to add ounces and obviously provide some, a lot of, is very attractive from an economic perspective when we come to a PA. But it's an incredibly additive type of thing and gives us optionality to actually go into production pretty quickly. Don't forget, over this blanket, we own the surface rights now. We have the trial mining licenses, so we could conceivably put up a small plant and start mining this thing in a matter of months, literally. Now, have we made a decision to do that? No, but it is an option. It's not currently part of the overall strategy, but it gives us optionality. So I think for our shareholders and our investors, that is an option that is extremely attractive. There are very few companies that have that option. And we may or may not decide to do that in the coming months. That's something that we have to assess. For now, the focus is on the exploration side and drilling off these high-grade zones, most of which are at depth.
I get it, and I promise I'll come to those, but I'm just intrigued. I want to be able to do some math in my head here. So what do you think, so what do you know today in terms of the extent of this blanket, in terms of, how far it reaches on surface and, how deep are we talking about? When say near surface is what?
What we know today, Matt, is that we estimate, and as I said, we've got to do 70 more drill holes, but we have already got some drill holes into it now. We know our estimates is that it's 400 meters north-south by about 500 meters east-west. Actually, it's a little bit longer than that, it looks like, but east-west. But let's use that. That's our best guess right now. Up to 50 meters thick. It won't average 50 meters thick, but there is a lot of oxide material here sitting on top. So, probably an average thickness would be somewhat thinner than that, maybe 30 or 40 meters. And then, average grade. Most of the average grades that are coming back are in the order of 0.5 gram to 1 gram. Some more, some a little bit less. As I said, we had that one stellar hole earlier, which was 60 meters at 3.5 grams within that blanket zone. But that was on the top of where the underlying hard rock deposit is projected to come through. Obviously, as you get further away from where the underlying deposit comes up, it thins and the grade dissipates. So, do the math on that. Don't forget that you need to add a density in order to get a tonnage from your number of cubic meters. And the other interesting thing is that it's also thrown up is, well, hang on a minute. If there's one blanket here, we've got 2 deposits. Is there another blanket on the second deposit? We've got 43 other targets with very good grade. Do some of these other targets have potentially have blankets on them? We think they might. But as I said, that's very much a secondary objective. But we need to do it. It will add ounces, and it will definitely increase the economic attractiveness of overall of the district and the project.
Well, okay. Well, again, I just want to stick on this because when people talk about districts, they take decades to kind of develop and get to a point where you can start monetizing them typically. I'm intrigued in these kind of short-term solutions, the kind of so what component. So as an investor, so what should I be thinking about your ability to maybe start producing money early and not keep dipping back into the market and diluting me? So a project like this, clearly you're not suggesting for 1 second that it would stand alone, but in the context of everything else that you're doing, perhaps you get it financed at a relatively low capex and get some monies flowing. Is that when you talk about options, is that the option that you're thinking about?
Yeah. We could start on relatively small scale production with very low capex and potentially start producing. And some people will say, well, why aren't you doing that already? That seems like an absolute no-brainer. Well, that's because we think right now there's more value to be created from discovery. I mean, look, this is an extremely rare project. We've got 43 targets here. And those aren't, and most of those targets have either a little bit of drilling on them already. 10 of them have already some very high-grade intercepts. This is outside the 2 known deposits, Matt. Another 12 or 13 or so have outcropping high-grade veins. We've got another dozen with high-grade boulders. I mean, it really is an incredibly prolific district and incredibly high quality. And it is going to take quite a bit of effort to actually fully understand how many of those 43 targets are actually going to ultimately prove to be additional deposits. We already think that we're very optimistic about this Mashishi target, where we've done some drilling, where we think it will be deposit number 3. The blanket is clearly a separate deposit in its own right. And there are going to be other discoveries. I'm very, very confident there'll be other discoveries. And with 5 rigs now committed, it'll take us a few weeks to get the 2 additional rigs in, but we've signed the contracts for 5 additional rigs. I think the investors should take from that we're very, very bullish and very optimistic, not just us, but so are our investors on the potential of the district. There's some frustration. People always want answers like yesterday. It's going to take us a little bit of time to do it, but we've now got a significant war chest here, and we've got 5 rigs. Okay, so it's a very exciting time for us moving forward. We've never had 5 rigs on this project before. It's a real step up. We're really raising the ante.
Well, I mean, it's interesting. I think normally when companies increase the number of rigs, it suggests that they're quietly confident about something or other. Because typically we see a lot of companies come on here and they're happy with their 1 or 2 rigs. It means they don't have to put out too much information because they're not confident about what they've got. So it kind of works both ways. So just in terms of, again, terminology here for people, because you've got targets. People come on and talk about anomalies and targets, but when you mention the word discovery, not too many people make discoveries. So when does something move from being a target with some mineralization to being a discovery? What's that difference?
One word: continuity. at least in my mind. I mean, some people would say, well, you can only actually start talking about a discovery once you've got a 43-101 resource on it. But, as geologists, we get a pretty good idea. If you've got continuity, if you can trace a drill intercept, and you can actually step out from those drill intercepts, and you can already start to see a deposit emerging. Now, most prospects and most targets, of course, just on a general basis, that's not possible, and that's why so few things actually become mines. But I mean, it's all about continuity, demonstrating continuity, and the results that we had out recently on yesterday on Morada Lua, we can see that continuity starting to emerge from. We had one hole that we drilled back in 2019 on that cut 3 different veins. We came in, we put 6 holes to the north and the south, and we can see the continuity of those veins. They're extending. The MG deposit, it's a deposit because it has continuity. You can actually see the thing coming through over a distance of almost 2 kilometers. You can see it. You can trace the mineralization from section to section. Same thing at Central, and frankly, it's the same thing at Mashishi, this zone which is 500 meters to the north. There's no resource on it yet, but we can see the continuity on it. We can see the zone. We can trace it. We've traced it now for 600 meters. And it's also the same thing with the blanket. Again, continuity is the key.
Okay, you've got 5 drills going. You've explained what you're going to be doing with each of those. Rainy season kicks off in November, so you've got a lot of drilling to do between now and then. Is that the point? At what point will you be coming to the market and saying, right, we've considered our options with regards to how we treat the blanket component? And you then have to have a conversation about how you finance something like that. If you thought that you could, if the numbers stack up, how you could deal with that, and getting the balance between discovery, because people like discoveries too. So you've got a kind of twin track or parallel track process that you're going to go through here. But when do you start talking to us about allocation of time, allocation of budget? You need to raise budget because if you need to produce cash, you need to spend cash. When do we get to hear that conversation?
Yeah, probably 9 to 12 months, Matt. I mean, I don't think it'd be before that. I mean, this is going to be an exploration-driven story for the next 9 to 12 months at least, and maybe perhaps beyond that. I think that would be the earliest we'd be in a position to have that conversation. Our investors have put their faith in us and their money, and we have told them this is what we would like to do, and so we are not going to sort of start changing the game. We've committed to testing all these high grade targets and doing a lot of drilling, and that's what we're going to do over the next 9 to 12 months. So be at least 9 to 12 months, I think.
So with the cash at hand, you can get through the next 12 months, can you?
Yeah. And the other thing I would say is that the drilling doesn't stop when the rainy season happens. The drilling is just a little bit more complex. It's more complex from a logistical perspective. I think we started drilling in the rainy season with this last program, and we tested the first targets we wanted to test were some of these areas where we've got extremely high-grade values in boulders. Now, most of those targets are sitting in low-lying areas. The boulders are sitting in stream beds, and guess what happens when it rains? They all become waterlogged. It becomes very swampy ground. That creates a big headache when you're trying to drill those. We have a lot of areas that aren't like that, but the central deposit, MG deposit, we don't have that kind of issue. It's much drier, but those areas were extremely difficult to test in the rainy season. And so several of the targets we weren't able to fully evaluate, and we are going to come back to those during the dry season in the next few months with a diamond rig. We are going to test them. I think it would be just because we've had, I think there has been a little bit of disappointment around some of the results on some of these initial targets where we've got high-grade boulders. They're not done by a long shot. I mean, we are definitely going to come back on those.
Okay.
We haven't explained where those boulders are coming from, so much easier to test in the dry season with the diamond rig. So
what's happening in Brazil? Okay, because we've had other companies operating in Brazil, and it's not back to normal yet by a long shot in terms of people moving around, in terms of assay results coming back quickly, in terms of getting crews to operate these rigs. I mean, what are you experiencing?
Yeah, look, I mean, this is an enormous country. It's 210 million people. It's huge. It's massive. It takes 5 hours to fly across it. It is taking some time to vaccinate everybody. They're not as advanced as most countries in Europe or North America. And so it's going to take a little bit of time. So there's still an elevated rate in terms of infections, and it's going to take, as I said, take a little bit of time for them to get to a point with their vaccinations where it really starts to significantly bring the infection rate down. Look, where we are in northern Brazil, the community, we run the health post inside the community. So we've been monitoring the evolution of the pandemic. As you know, we shut the project down as a precautionary measure for 3.5 months from April to July last year. And at one point there during sort of April, May time, we were seeing 20 infections a day in the community that we're in. We haven't had a case of COVID-19 in the community for, I'm guessing, 2 or 3 months now. I mean, on our weekly management calls, it's the first thing we discuss. Have there been any cases of COVID-19? What else can we do? Obviously, we put in lots of precautionary measures, but it's allowing us on site to power away. But there are certainly, the pandemic is having more of an impact in some of the larger cities in the south, particularly in the south. For example, turnaround times from the last slowly improving, but because they've had people who are sick and they've been, the supply chain has been impacted in southern Brazil for things like parts, consumables. We found that. So it's an evolving situation, but the mining industry is a critical industry in Brazil. So the government's very keen that it continues. So I think things will slowly improve. I don't think there'll be a massive change, but I think the turnaround times from the lab will gradually start to adjust and improve and get back to normal, but it'll take a little bit of time.
And when do your next results come out, do you think? Do you know?
I think there'll be quite a few results here over the next week. I can't give you an exact date when the next drill results will be coming out, but obviously there haven't been a lot of drill results during the financing. We put out some news, as I said, on this Mora de Lua target, but the ante with the results will increase. I mean, with 5 rigs turning, we should have a lot more results. Frankly, I think it's going to be difficult for everybody to keep track on them. I think what I've noticed is there is an expectation. It's almost like people expect you to have an incredibly good drill result every time you put out a release. I mean, this is exploration. There is quite a bit of risk in exploration because you don't know what you're going to get. And it would be very easy for us to say, right, to set up 10 meters away from any one of those 10 areas where I said we've got high-grade results outside the 2 deposits and start plugging holes in like a pincushion and getting great results. Now, would that add anything to the project? No. Would it keep a certain number of investors happy? Yes, because they'd be seeing great results, but it's from the same small area of each of these targets. So that's not what we're about. And as you know, Matt, a lot of this, I have a large shareholder in this company. I've got $1.7 million aligned with my shareholders here. But what we want to do is demonstrate and fully evaluate the potential of this district. And that means that some of the holes are going to be better than others. There are going to be some holes which aren't going to come back. But again, I come back to the fact here that this project or this district was the largest placer gold camp, so alluvial gold camp in the Tapajos region during the 1980s. Why is the Tapajos so special? Because it is the site of the world's 3rd largest gold district. There was placer gold district in the world. There was 20 to 30 million ounces of gold washed by informal methods. That's just little sluice boxes and stuff like that during about a 15-year period. And Cuiú Cuiú was the largest one. And so there is undoubtedly a lot more gold sitting in the hard rocks underneath all these streams. We think we found the source of perhaps 5 or 10% of the placer gold here. So it begs the question, where on earth is the other 90 to 95% of the placer gold that was mined here being eroded from? And as I said, undoubtedly, we think that several of these 43 other targets are actually going to prove ultimately to be additional deposits here.
Well, Okay, okay, good point. But it comes down to your strategy, how you choose to drill this, because we've seen companies go and drill a pin cushion, because it just helps with the headlines, right? Not do things properly, and you've got a district, so you've got a lot of land to play with, so you've got to get that balance between getting the headlines and also doing it right. Do you know what I mean? You set the bar for yourself quite high last year. You shot up from nothing to, whatever it was, 8, 9, 10 times what you started the year at. So you've set the bar quite high. Going forward, how do you play it? Because you've got to be tempted. It's one of those things you've got to keep those headlines coming, but at the same time, they don't tell you much as a geologist. So how do you play this?
That's an easy answer. Right, but let's just go back to the pincushion analogy. That's not what we're going to do. There are lots of other companies that you want. If you want your company that you invested in to drill a small area, say 50 or 100 meters across, or where they know they've got good results and keep putting out fantastic results, but not actually adding anything at all to your project, don't invest in Cabral Gold. What we are going to do is systematically go through all these targets and determine which ones are economic deposits. We're going to start with the higher grade ones, where we've got some indications. We're going to rank all these things on a whole series of criteria, and there will be a focus. But to your specific point, Matt, we think that a combination of infill drilling to determine what the extent of the high-grade zones is within the existing 2 deposits, which is obviously a lower risk prospect because we've got more drill holes into those zones. We can see those zones starting to emerge from the larger deposits themselves. Combination of that aspect to the drilling over the next 9 to 12 months, and the fact that we are going to be testing other these regional targets outside the 2 deposits where we've got high grade. We've got targets like Morro de Lua where we have 1 hole, high grade, and now we've found that there's continuity. There are other areas where it looks like there's going to be continuity as well. So that sort of combination, but that is obviously higher risk, right? That's going to, because we've got less information. But that combination and that sort of dual focus actually should generate an awful lot of good results going forward. I mean, we've had some great results over the next over the last 6 to 9 months, as you're aware. 35 meters at 5.5 grams at Mashishi, fantastic. I mean, Mashishi, as I said, that's one of the targets where we're starting to see continuity over 600 meters. So I think it's going to be a very exciting period for us. It has been an exciting time. There's obviously always consolidation. Companies like ours don't have, as you know, a linear sort of progression in terms of value creation. I mean, and there are obviously market influences which obviously impact that. You get a couple of negative results, everybody starts to say, you've had some negative drill results. Oh no. Hang on a minute. We've got 10 targets with high-grade results that we don't know that we've reported previously, including, things like Central Southeast, 27 meters at 6.9 grams, Jerry Moon's SEMA, 39 meters at 5.1. I have all these in my head. Mashishi Southeast, 3.4 meters at 36.9 grams. They're not part of the resource. How many of these things are actually going to be additional deposits at Cuiú Cuiú? And we think a number of them will. They undoubtedly will be. There's continuity in several areas. We've got 2 deposits already. We've got continuity at Mashishi. We've got continuity in this blanket. There will be, it looks like we're now starting to see continuity at Morro de Lua. Early days, we've only got 7 holes. But some of these other things are going to have continuity. So I think it's going to be an incredibly exciting time for our company. 70 million market cap, million ounces already on the board in terms of the resource base. A district that produced 2 million ounces historically of placer gold. Enormous potential.